Welcome to another members update. The date is Sunday, October the 9th, and after the market closed on the 7th. The market update, the overall market, I've just posted before this one, so always watch that one first. Where I explained that, this is really a very wandering market now with no direction. And they're not, that's not ideal conditions. We always look for the wind to be in our sails with the overall stock market when trading, ideally. And so that's the reason why, there hasn't been another under the Make the Mum a Millionaire trades. We've done the first two steps. But we have, you have to be patient with this, because you can lose it all just as quick if you're rushing in and you're not cherry picking the very best ones. And that's going to really defeat the whole point, So we have to take our time with that, and I'm only going to go for those when I'm really the surest I can be. And, unfortunately, just have to be patient when the overall market isn't cooperating, as you might expect with a presidential election just a few weeks away now. It's the market hates uncertainty, and that's what we're seeing across a range of things. Not just the overall stock market, but commodities and all kind of currency markets, and there's just a lot of uncertainty right now. You may have seen you probably would have seen the pound collapsing last week, and these things are happening very quickly, because of what's called high frequency trading is taking over more than ever, and the bank supercomputers are seeing these moves, and these things just happen very quickly and very dramatically. You have to be quite on your toes right now, or just stay out. There's nothing wrong with watching and learning for a while. Let things pan out, and see what happens next. So that's why there's the Make the Mum Millionaire trades. Nothing right now, and that's fine. I've got two in the bag, so let's not blow it by doing something rash. The overall market in terms of shorting the market, which is another thing that I'm letting members look over my shoulder with about what I'm doing there regarding shorting the market. Let me just go back to looking at the overall market then with that in mind. So there's the S&P 500. However, I think the one to be looking at is the NYA more so. I think this is the truth. I think the S&P 500 is an anomaly. So here's where we're at now. I think this is a big overblown bear rally that went on way too far, and it's been manipulated by the Federal Reserve in order to keep things sweet for the presidential election so that they can all keep their jobs, because if Trump gets in, they know that they're all fired. He's said as much. So that's where we're at right now. So, another reason to get the presidential election out the way is because, markets might start normalizing. We can get back to what should have just been a big bear market that started, middle of last year. So, as I've said before, what I'm going to do, if you're just joining me now for the first time for some reason, then what I've explained I'm going to do regarding shorting the market, I'm dividing up my position. However much I intend to throw at this, I'm dividing that into three sections. I'm not going to put it all on at once because the reasons and markets are moving quite quickly, and it's a little bit of a confused picture is what they've distorted it into. So having said that, I don't want to miss so the first one is going to be just an intelligent guess. I'm not really looking that technically at it. It's going to be an intelligent guess of what I think is going to be the top of this market. It's not very scientific, but I want to have something slapped down ready, Once I start to see more evidence of that, perhaps when it breaks below its 40-week moving average there, the blue line, then I'm going to add the next chunk and go from there. Because anything can happen, So I don't want to put it all down at once, and the market, for some bizarre reason, soars off to new highs. So that's the strategy, and I think we're approaching that time now. See how things go. Just hanging in there. Haven't deployed that first third yet. The way things are going in the election, I'm starting to wonder if the market's going to start pricing in a Clinton victory, which it will like, purely because that's the status quo, not because she's good for the economy. Market hates uncertainty, and that's what we had with Brexit. The market started to predict, and based on what the bookies are saying, and it's the same thing in the States, by the way, it's almost like a dead cert that Clinton's going to win. And there could be a surprise, much like Brexit. So if I start to see the market pricing in a Clinton win, then getting close to the election, which is about a month away now, that might be a good time then I'm going to deploy that first third then. So we're not quite there yet. So so that's the shorting, that's the Make My Millionaire. Having said that, I do every week look at some, I'm toying with a few trades, nothing drastic, because I don't like the overall direction of things right now. Here's one that I mentioned last week. It's doing that classic stepping thing. It looks like about $17, $20, $23 going up in threes, and then 26. So it looks like it's in this middle of this next box here between 23 and 26. I said I was looking at getting between 23 and 24, and it allowed that just in the last couple of days of last week. And there's pretty much a good entry point here. It's like now or never, not because it's guaranteed to go up, but the downside here is you could be out of this at 22 and only risking 100 points, and the upside could be a lot more. So that's good. Everything else is sort of ticking along, apart from gold. So we had this is a very jittery market. And what's happened, just so you know what happened with gold this last week. As I said, last week I said that gold had a very clear defined level here around a support 125, which meant that it had a lot of upside to get into. But if it dropped below that, then that probably was a bad thing, and that's exactly what happened. And it just shows you, anything can happen. Just because that's a line of support there doesn't mean it's necessarily going to hold. What we're doing here when we look at this is we're saying, look, the downside should be limited. But what's happened here is that the market suddenly decided, the Federal Reserve is going to raise rates in December, so that means we dump gold. I mean, it's just a very short-sighted, jittery, quite silly market actually. But you have to respond. Now, there's two things going on at any given time. You're either investing or you're trading. Investing is longer term, where we're not so bothered about the short-term gyrations of the market. Here's the big picture of gold, and the fundamental picture for gold that I've laid out before hasn't changed at all. That gold is in a bull market. And for example, if I've got physical gold, I'm investing for the longer term with the actual gold stocks that I own, or physical gold. I'm not going to bail out just because that happened. And in fact, this thing looks very overdone now. Because you can see the uptrend is still intact, and the market may be thinking, okay, interest rates are going to rise, but that doesn't take away the fact that the governments worldwide are awash in debt and have got no choice but to default or print their way out of this. Gold is going to be a last man standing in the whole disaster. So if people want to dump their gold at these silly prices, then all that does is create more buying opportunity for people who want to invest in gold. So that's investing. Trading is an entirely different thing altogether. With trading, it's short-term speculation, which is what we usually talk about each week, where I'm looking for these opportunities where I have a very small downside potentially, but a very potentially much bigger upside. So if I lose small, but if I win big. And that's really all we're looking for as traders and speculators. Never get the two confused. With investing, we're looking at the fundamentals, the sort of the logical case for something. Trading's you just don't even look at the fundamentals. Here's the chart, here's what's happening. So let's look at the daily chart of gold, and of course that impacts the gold miners, which is what set off people's stop losses, and anyone who's looking at holding gold miners there in the last week, a similar situation. But this is really getting overdone now. And what happened on Friday is it's just catching here on what is the 200-day moving average, a key moving average. And notice how, we're getting into this shaded area here on the RSI, which is typically a very overblown situation for something. So I'm not saying that's a new entry point for gold, because it's got a sort of as a trading gold, but it's got to sort itself out again. Because definitely some line of support is broken there, but it's going to cling on to its 200-day, which is significant, a very significant line, and then it's going to have to carve out new resistance before I look at that from a trading point of view again. But I think having said that, it's just a question of time, because as soon as the market realizes that okay, they're going to raise interest rates in December, but it's by a quarter of a point or something, purely a token gesture. And then all governments all around the world start talking about printing money for this and printing money for that. This is a classic jittery, nervous stock market who's dumping things that they didn't understand in the first place. and a very nervous money is dumb money, and what this has done is shake out a lot of the dumb money in gold. And nothing goes up in a straight line. Every bull market has to shake out what's called the dumb money, the people that come late to the party. Otherwise, it would be too easy. And that's all that's going on now. Things don't go up in straight lines. Gold is shaking off the dumb late money. From an investor's point of view, traders, well, we just duck and dive as we see fit. Here's the gold miners. This is the index of the overall gold miners. Exactly the same sort of picture. It had looking like it was carving out support there, ready to go higher. Looked like the worst of the damage had been done, so it wasn't unreasonable to try and intercept that, get in here with a low downside, but it broke it, and there again it's settling around the 200 day. So that's what's going on there. With everything I've said in mind, a very unsettled market, I'm going to look at a couple of stocks. Purely, I'm not going to dive into these. Maybe I'll play around with a couple of pounds a point or something. But I just think this is a very, jittery market. It needs to sort itself out. But if I was a gambling man and got bored, here's a couple of things I'd be looking at, which may interest people. AFL is it's a financial stock which seems to be people are interested in right now. As you can see, this one's in a nice up, sort of moving upwards, and it's carving out boxes at 75, 74, 70, 65, and looks like at the bottom of this step here. And if we zoom into the daily chart, there's a fairly decent line of support there at around 71, maybe with a tight stop here. I might look to get in between 70, 71-ish, and call it 69. To bail out on a close at 69 or 70 even to bail out on that one. That's nice support there. In fact, even 70. And then the other one is NDAQ, NASDAQ. This is actually the company that runs the NASDAQ, but it's its own company. It's nothing to do with that. We're not trading the actual index when we trade that. This is more evident if you look at the weekly chart. Sometimes the weekly chart shows it, and you can just see this is just on one long bull market, which happens to have convenient steps at 65 and 70 and 60 and 55ish and so on, and it's kind of at the bottom of a new step here. So this could be one to get in around 60. Looks like it might have just leveled off there, so it just judgment call between 66, 67, something like that. But your stop on this one would probably want to be a 64 below that 200 day there. So it's somewhere in this middle. So do you want it to go down there? And if it does go down there, something might be going wrong with it. This is looking like it's where it's carving out its support right there. So that's two interesting stocks. Let's see. Let's see what happens in the week ahead. But there's been some good profits locked in recently, and the winners are still riding with their stops in place. So let's just sit out on the sidelines, and nothing wrong with that. Speak to you next time.